Europe trades higher, the dollar is weaker, and futures on Wall Street point to a flat open in front of U.S. data expected to show the economic recovery is strengthening. Key data include Case-Shiller home prices and consumer confidence. All eyes this week will be focused on Thursday's Italian bond auction. In corporate news, Sears Holdings said it would close over 100 Kmart and Sears stores and take Q4 hits to the balance sheet and miss quarterly comps. I'm Jill Malandrino, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Welcome to the last week of 2011 and a very thin week of trade. We have Case-Shiller and consumer confidence today, but all eyes will be focused on Thursday's Italian bond auction. So kind of a lot to be nimble with this week.
I think a lot of time, though, between now and Thursday, and a lot of people were rewarded last week. Last week, we finally had a nice, methodical four-day move. Some people are saying, oh, Santa Claus can come now, and I don't understand how they say it now, considering we just had a four-day move, almost 4 or 5%, depending what indice you look at. And now this week, it's just a question, can it extend? Where can it go? How do you stay involved but not overly involved in what typically is the lowest volume, hard to maneuver week of the year?
Scott, so last week, what was the day where it made sense to get in? And the fact that the Dow is actually leading this, what does that mean for the overall market?
Well, a few things. First of all, I think they wore everyone out. Like even myself, everyone wanted a Santa Claus rally to start 2-3 weeks ago. It waited till Tuesday. So if you look here at the chart of the S&P, you will see on Tuesday was the day we had that igniting bar. On Tuesday was the day that a lot of people who were flat, including me, said, uh-oh, here we go, it's go time. So this was the day that the S&P had a really nice move. And if you don't like buying strength, if you guys remember, Oracle came out. They came out with that pre-announcement, not even pre-announcement, just the earnings that were disappointing. And we held this important level. So the top third of this Tuesday igniting move held. So this was your buy the dip. So if you positioned on that Tuesday, Wednesday, you got paid on Thursday, Friday. And for me, I positioned on Tuesday. I added some positions. And on Friday, I sold. So that was my 4-day Santa Claus rally. And that's all that I wanted. And now I'm going to be a little bit more flexible. It might even short a little bit, long and short. But that was the 4-day move that you could sink your teeth into. What
I think is really interesting, and again, you pointed this out last week, where the Dow has been leading the way. With the economic data that's coming out this morning, it's expected that it's going to show that the economy is recovering. And anytime we see the transports, the Dow, those real American domestic big names lead the rally, that's a good sign, and that could potentially mean something for 2012.
Typically, that's good for investors because those are the names you know, so investors own them longer term. For traders like when the tech leads. Traders like when you have stocks breaking out, 52-week highs that move fast, and those Dow names usually don't. But if you look at the chart of the Dow, take a look here, you will see that the Dow has already taken out that high from October. We're not even near there on the S&P. So look at this. This was that Tuesday move. This was big. Okay, so usually if the Dow leads, sometimes it gives you a little bit more support because there's more stocks involved, or with the S&P, actually the Dow is smaller, but it's the names you know. If you look here on tech, you'll see that tech isn't even above the 200-day yet. So, that has something to do with Oracle. People don't know if it's going to, lead to other stocks in that sector. So I would watch tech right here. Let's see if any energy can come back. If the Qs could start getting above 56 or 56.50, and if they get some power here going into 2012, you might see a lot of these ranges get a little bit friskier as you head into that first, new money time for 2012.
Right, so fundamentally it's lending some support, and the fact that the charts are confirming that, even a little bit last week and hopefully going into this week, that's a good thing overall. Moving into the sectors, we're going to talk about what was nice on Santa's list. Are these stocks, does it make sense to, should we follow the momentum? Should we buy more? Should we take back a little bit? Should we possibly short? Let's start off with Apple. This monster is up 20% over the market this year.
Yeah, Apple, in 2011, one of my targets was that it would get above 400. And there's been times to be heavier in Apple, times to be lighter. You had that earnings come out and they missed, and you had that gap down, and it was a better short, 30 days ago. But then last week, this was my favorite long that wound up paying me for Santa's little rally. So if you look at Apple here, you will see, this was when they had the earnings miss. Okay, couldn't fill the gap, and it led to a pretty substantial move down to the 200-day. Then once it broke this descending channel above this 376, you had a quick little bounce, held higher, and then this 4-day stretch was nice for traders. So now the question is, will this 407 to 410 resistance area hold the stock? For me, I think, if you were looking for a trade, I did take it on Friday. Now if it could hold above, just say 400 or 398 and go sideways, we could get another trade into this gap into the new year. But right now, I think you got to be light. If you have a macro investment theory on Apple, stay tier 1. If you're looking for a trade, I would have definitely peeled off some on Friday because that was a nice 4-day move.
Moving on to Cabot Oil and Gas, ticker COG. This stock's up 50% for 2011. It's trading almost 55 times at this point. Does it make sense to get involved in this recent pullback?
Well, in this group, I'm trying to find stocks that have relative strength, and this one is above some of the moving averages. It's been okay, not a barn burner, but if you take a quick look at the chart, you will see it does look like it's set up for another move. It's trying to take back all its moving averages. If this thing could start getting above, what is this, about 78.50, you could see it clear the way to go back to the old resistance between 85 and 90. I think it's a slow, methodical trade, and it could be for some cash flow above that level.
Moving on to ISRG, this is recently broken out from a couple months of consolidation.
Yeah, well, this stock, I think we spoke about a month ago, saying what is a candidate for the Santa Claus rally, and it was above the moving averages. It was showing relative strength, nice tight pattern. Investors continue to get rewarded. Then finally, for traders, you had a nice move on Friday. Come take a look at this chart. This chart looks awesome. You had a nice range here, from the low 400s, and then you had a tight pattern coming into this channel. Then finally, it started to get above this 445 area, and it closed at 457. Nice 2-day trade if you were in there as a trader, and as far as an investor, you've been rewarded this entire time. So it does show you that you could be a stock picker, because look at the size of this move over the last 2 years. So there is some room and some areas for stock pickers as well as just traders.
MasterCard and Visa, these two names traders love to get involved with this year. There's a nice heavy volume. They've outperformed 40 and 30% respectively. The consumer has pleasantly surprised, and spending has been there to support this.
Well, another group we've spoken about many times. They don't have the mortgage mess behind them. They don't have as many regulations once it was cleared. And Visa has been the best one out of them all. Visa, I think, is at new highs. It closed there on Friday. You take a look at the chart, you will see, here you go. It's extending. This was that last pattern that we had here, this nice little wedge above this resistance. And then once it started breaking above 98, you had a clear move. And it closed at 102.48. If you're an investor, stay with it as a trade. It's a little slow, but it's still okay. As far as MasterCard, it's been lagging just a bit. It did, remember this little uptrend that we drew over here. It held it by a thread and then ignited when the market got a little bit better on that Tuesday. So now I would say there could be another trade set up if we can get through these highs here from November. So this level right now is 385.
And rounding it out with Union Pacific, ticker UNP, one of the rail names. We had a really nice play with options profits with CSX. And again, if these names lend to support, that's a good thing. These transports, these supportive market type of names.
Yeah, well, this is something that I don't trade all the time, but it's good to see that there's different stocks and different groups that are rewarding you. So if you look at the chart of this one, you will see had a nice move last week also. Actually it moved a little quicker than I would have expected. Look at this 4-day move. It was above the moving averages. It held support, and then when the market started to get a little friskier, it went from about 99 to almost 105. So let's take a quick look at the weekly chart here. The weekly chart looks pretty good here too. So this is a candidate for 2012 to continue to do really well. If it were to clear this 105 on a weekly basis, you have 80, 105. This thing could hit 120 next year.
We are going to jump into a quick commercial, and when we get back, we dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We jump into the trenches with Santa's naughty list. Scott, I think one of our key themes this year was for Q3 especially. If your name was bid way up, especially if you're a tech name, and you did not have a solid report, you got smacked around, and Amazon was one of those names. That Monday before, we were like, short this name into the print, and that completely paid out as we saved people almost $40 on this.
Yes, $40 is a lot.
That's not bad.
And especially with this one. And we talk about all the time momentum names. And we have the ability to see when we see relative weakness in momentum names. And if you see that, you get ahead of the game. A lot of stocks that were, the darlings of this year or the darlings of the past few years, once they lose some momentum and once those PEs start to come in a little bit, they correct fast. And Amazon has been one of them. It hasn't been devastated yet, but you have to really look at this stock closely as we go into 2012 because there's been a lot of technical damage. adding up. So if you do look here, on a short-term basis, you had a great call selling it into earnings, but you didn't even have to even take the risk of selling it into earnings, but you did save yourself, this gap down. After the earnings, you had a nice little move sideways. It couldn't really fill the gap, and this is when traders, said, okay, it's weak. You could start shorting it or get out right around 210. 210 moved down to about 180. Small little oversold bounce, didn't amount to much again. And then now it's holding down here, below this 185, 190 area. The longer it stays below 185, 190 going into 2012, if you look at this daily chart, or not even the daily, the monthly chart, you will see that there's a lot of room underneath this, for a move that could take it down to about 140. So it's a very crucial time for Amazon. I know everyone loves the Kindle Fire. They put it out at 195. They don't make any money there. They've missed their quarter twice. They've gotten free passes. This time it's not getting a pass. So if you're long-term in Amazon, just make sure you have some stops in. Short-term is a trade. It might try and bounce, but we will watch the action very closely as we move further along.
One of the things I've learned working with you over the past 6 months and your traders at T3 is learning to identify patterns. And Netflix is another one where we've learned just by looking at the patterns, you don't even need to know what's going on fundamentally, but to see where the breakdown is.
Well, Netflix, it was interesting because Netflix, everyone always loved to hate it. And we're always like, why are you shorting Netflix? It hasn't given you any signs yet. Then finally, it started to break its uptrend. And then that's when all the bad news started to hit. So if you look at the chart of Netflix, you will see right here. I put up the monthly chart. Actually, I'll go to the weekly. You could see it. Look, you could just even just draw a line here. Draw a line from the low and draw it up to this area where it actually broke an uptrend from 2010. And if you missed it there, look at this very methodical support that it broke right here around 190. So if you didn't see this little outside day here and you didn't see it break this uptrend, you could have seen it break support right here around 190. Okay, so if you got out of the way, you saved yourself a big move lower. And then, it came all the way down, put a bear flag in right here. Look at this. Didn't even retrace it all. So, if you missed that move, you could have got another move down from 98 all the way to where it is down at 72. So question is, how do you maneuver it here? So at this particular point, I don't know, for a day trade, I think guys are going to say, okay, you could squeeze, tax loss selling's done, you have a few big guys trying to place themselves involved here. I would say over, what level is this? This level here is about 77.50. If you can get above 77.50, you could get a little squeeze to 81 and maybe test this gap here, but overall, it's a broken stock. But sometimes one man's trash is another's treasure. So right here, I think guys are making money both ways, and just know that above 77.50, it can get going a little bit more. But if it doesn't get above that level soon, you're going to see another discount probably down to about 60 bucks.
Moving along to GMCR, this was a leader at one point this year, but it's really lost its composure.
Yes, GMCR, same type of scenario. You had a lot of these stocks losing momentum. You had Herb all over it.
Right.
Every time the market started to bounce back, it started to bounce back less. It showed you its cards that it was getting relatively weaker. So if you look here at the stock, you will see, what you could have seen, and really right around here. Okay, this is when it had a little faulty breakout, this little uptrend got broken somewhat to the downside, couldn't get back above. You had a nice wide range bar right here, and it brought you into some big support. And then I remember being in this morning call and showing you this last ascending channel that once it broke to the downside, really 90 to about 85 was the area to run for the hills. And if you did so there, you saved yourself a lot of damage. And now on the short-term level, you have a small inside range that people are looking at. So from a day trade, if you take a closer look here, I think the shorts will get squeezed if it starts getting above this 47. But if it doesn't get above this 47, 48 quickly for a bounce back, you're going to see a discount. And that level to trade it against is 43.34. If it breaks below there, it's really in trouble.
For solar, one of the first ugliest stocks this year, down over 70%. This thing can't get out of its own way, fundamentally and technically, for that matter.
Yeah, this also showed you some signs. I remember guys trying to short it. Like if you're a trader, you knew it wouldn't break 110, it wouldn't break 95, and then all of a sudden when it does, it collapsed and cratered. If you look at First Solar, unfortunately, it's a theme type of scenario, a scenario that's a concept play where you need a lot of money and a lot of funding, and once that funding ran out, you had to run out also. So I want to show you quickly on the monthly what you could have seen here. Really just right here, just drawing a line. Remember I talked about 105? Look what happened when it broke this 105. Pow! So you have a high, lower high, trend changing, broke 105, that's your out. And now, I guess it's worth a look here. We'll see how it plays out coming into the beginning of this year. But I think maybe there's just a trade here if it could fill the gap. But if this stock can't even fill the gap, which means that no one even wants to buy it down here at a discount. It could take out these low 30s, but it's, now with this one, you're always hearing take over target, take over target. So if you were short, I would definitely have covered. If you want to be long, I would just do it intraday.
Coal names have showed relative weakness this year as well, and ANR is a ticker that's been down 60% for the year.
Yeah, the whole coal, steel, they've been just so battered and bruised. I don't even remember the last time I traded a coal name. That just shows you how out of play it was, this year. So we'll see what happens next year if there's some rotation there. So if you take a quick look at this stock, you will see not much to really look at here. I guess you could draw somewhat of a downtrend, right? Here you go, starting all the way back from July. You have a high, lower high, lower high, lower high. This is the new support. So we'll see if for some reason coal does get a little bit better. Maybe there's a move here. If we start getting above this downtrend and holding it, it's okay. But I've been to China. I've been so many places that burn coal. It's gross. Right. I went to China. I was trading there. I was trying to teach a class. I tried to go for a run. You couldn't even see in front of you because all they do is burn coal, and it's so bad for you. So I do think as the world gets smarter, they're going to be using less and less coal. So using the Buffett fundamental way, I would think that coal is going to have a hard time moving forward. Moving
along to quick hits or some quick cash, let's talk about Caterpillar. That's a name that you've gotten involved with more recently this year. I happen to love Cat, Deere, all those names that are involved in the ag space. Let's take a look at Cat.
Take a quick look. It's been in a box pattern, so I want to show you this again. It hasn't had that much action, but you have your resistance here up around 97, then you have your support, and now it's midway through. So the question is, for a trade, can it puncture halfway through this channel to get to the upside? So I would watch this area. If the market continues higher, you can get a nice trade through 92.50, and then you have to see what happens here at the resistance around 97.
Las Vegas Sands, ticker LVS. Is that worth taking a gamble on now? I know, I pulled the red dog.
There you go. I think it just had a nice move from the low 40s to about 43.5. I think it needs a rest. If you're in tier 2, take some off. If you're in tier 1 as a macro play, because it still never broke that range, just stay involved. But I think it needs a little bit of time here.
Big Blue, IBM. We love this name over the summer, but it just petered out at the end of the year, basically.
Yeah, well, Oracle. It's the same similar business, not exactly the same, but if it took so many quarters for Oracle to finally have a miss, IBM hasn't missed in so long, so people are trying to think maybe with the world slowing down, IBM might have a bad quarter, so they discounted a little bit. If you take a quick look here, you'll see, I don't know, it's hard to make it or make something of this. It did break this uptrend, and then it quickly snapped back above it, and it also filled this gap here. So it did show you some demand here. I don't think it's game over for IBM. I just think that this quarter is going to have a lot riding on it. It could bounce a little bit further, maybe about 188, but then at that point, I would think some people might try and sell it.
JCPenney, it seems as if this holiday season we were pleasantly surprised by the strength of the consumer.
Yeah, and JCPenney, we talked about, had a nice tight pattern last week. If you look here at the chart, you will see it traded above that pivot. I think last time we talked about it, I drew this. So even so, for something for JCPenney, not so bad. 34, nice little momentum move. And for investors who stayed the course here, it's on its way, and this looks like 38 to 39 could be in the cards. I wouldn't just chase it here, considering you just had a nice move, but it just goes to show you can pick some names in certain sectors, and you could own it versus just trade it like we tried to do the last few days.
And rounding out with Honeywell, this is a name that we've gotten more constructive and positive on with options profits as well.
Yeah, this stock has looked much better. It's starting to come. It's broken above resistance. I haven't really traded it lately, but if you take a quick look at it, you'll see. It's coming into a resistance area right here, after a 3-day move, so it might take a little bit of time. This is a little bit of a reverse head and shoulders pattern, so that actually looks constructive for the overall market. If Honeywell can start getting above 55, you're going to see some other moves in that area. And if you look at what happened here with GE, that's a huge move for GE. Look at that. This was your nice little pivot. I just threw GE in the mix here, 17 to 1823, coming into some resistance. I guess there's a tiny bit of room here, but that bodes well for some of the industrials.
All right, well, we have a short trading week. Volume's going to be light, but that does not mean we're falling asleep behind the wheel. We have a special edition of the Morning Call with Scott's colleague from Real Money over at the Street, Brian Sozzi, joining us. We're going to wrap up this holiday season with retail. Don't forget to catch Scott on the daily recap on T3Live.com. That's your Morning Call.